Hey guys, welcome to the Bitcoin Fortress podcast, helping you increase your financial freedom. This is episode 148, recorded on January 5th, 2025. This podcast is for entertainment only, not investing advice. Do your own homework. And so, Happy New Year. First episode of 2025. We are at block 877974. The price of sats is 1,023 sats per dollar, and fees are currently low, medium, high, all at 2. We'll begin with the market news update and outlook. Then we'll get into the top weekly Bitcoin news. We'll take a look at the latest Bitcoin Fortress Substack post, and we'll finish up with top boosts. So with that, we will jump right in. The benchmark S&P 500 index ended lower for the holiday shortened week. No Santa Claus! As Wall Street's bull run lost some steam. After hefty yearly gains, investors took some money off the table. Additionally, uncertainty over the economic effects of President-elect Donald Trump's policies and the path of future monetary policy weighed on sentiment. Tuesday marked the final trading day of 2024. The S&P 500 eventually posted a massive advance of 23.31% for the year. It was also the first time the S&P delivered back-to-back annual gains of more than 20% since 1998. The bull run in 2024 was driven by several factors, chief among them the Federal Reserve finally starting a rate cutting cycle, a continued run up in technology names driven by the artificial intelligence craze, and Trump's divisive election victory. New Year's Day was a holiday, while Thursday was the first trading day of 2025. Wall Street eventually ended lower to kick off the new year. But history shows that the S&P's performance in the first trading day of a year is a poor barometer for its eventual annual performance. Tesla garnered a chunk of the spotlight this week amid two separate developments. Firstly, in the early hours of New Year's Day, a Cybertruck exploded outside the Trump International Hotel in Las Vegas. Can you say false flag? Then on Thursday, the company reported its first ever annual fall in deliveries. For the week, the S&P 500 slipped 0.5%, while the blue chip Dow fell 0.6%. The Nasdaq Composite shed 0.5%. And looking ahead, Wall Street will start the year off with its hands full as investors wait for crucial data next week. Markets will be shut on Thursday, January 9th, in honor of former President Jimmy Carter, in line with Wall Street's tradition of mourning the nation's leaders. Thanks for the Department of Education. Investors' focus will be the U.S. jobs report for December on Friday. The street is expecting non-farm payrolls growth of around 150K for the month, down from 227K in November. Another keenly awaited piece of data will be the minutes from the Federal Reserve's mid-December meeting, scheduled for release on Wednesday. Investors will also be looking at durable goods orders and services PMI data throughout the week. Additionally, next week we'll see a major technology event, the Consumer Electronics Show, scheduled from Tuesday to Friday. NVIDIA top boss Jensen Huang is expected to give a speech. Finally, Delta Airlines will be unofficially kicking off the earnings season with its quarterly report. All right, jumping into the weekly top Bitcoin news, we will start with No BS Bitcoin, block 877778, a palindrome block. Important news of the week. We'll get into a little more detail on this one later, but the IRS has delayed Bitcoin cost basis reporting rules until 2026. The U.S. Internal Revenue Service announced that it has delayed new Bitcoin tax reporting rules until early 2026. This extension provides brokers with additional time to adjust to the cost basis regulations for centralized platforms. Industry groups are suing the IRS over the new KYC broker rules for DeFi front-end services. The Blockchain Association, DeFi Education Fund, and Texas Blockchain Council aim to block the latest midnight rulemaking that requires DeFi entities offering front-end services to track and report customer information. The IRS and Treasury have gone beyond their statutory authority. Hmm. In expanding the definition of broker to include providers of DeFi trading front ends, even though they do not effectuate transactions. Not only is this an infringement on the privacy rights of individuals using decentralized technology, it would push this entire burgeoning technology offshore, said Marissa Koppel, head of legal Blockchain Association. The EU kicks off 2025 with a remarkable shit show of financial surveillance masquerading as security. Starting January 1st, 2025, the EU's FATF travel rule requires virtual asset service providers to verify self-custodial wallets for transactions of over 1,000 euros. That's not a lot of money, folks. VASPs must also collect, store, and share beneficiary information. While the effectiveness of the travel rule in combating money laundering remains unclear, what is clear, though, is that the travel rule raises major safety concerns for Bitcoin and other crypto asset users. From now on, highly sensitive user information is being shared not only with the customer's financial institution, but also with all institutions they transact with, increasing the risk of hacks and identity theft, reports The Rage. Fantastic. The UN General Assembly has greenlit a cybercrime treaty despite widespread backlash. The UN General Assembly approved its cybercrime convention that may change how governments regulate the internet. Human rights activists, cybersecurity experts, and major tech companies have voiced their opposition, cautioning that the convention may be misused by authoritarian regimes and lead to numerous privacy violations. Aren't all of regimes authoritarian now? I don't know. Attempts to include human rights protections in the treaty failed during negotiations over the summer. The Cybercrime Convention will be signed in Hanoi, Vietnam in 2025, taking effect 90 days after the 40th ratification. Enforcement of U.S. Corporate Transparency Act blocked again following a court reversal. A Fifth Circuit panel reinstated the nationwide injunction against the Corporate Transparency Act just 3 days after another panel lifted it, causing additional confusion regarding compliance with the controversial law. In light of a recent federal court order, reporting companies that are not currently required to file beneficial ownership information with FinCEN and are not subject to liability if they fail to do so. While the order remains in force, however, reporting companies may continue to voluntarily submit beneficial ownership information reports, reads a statement on FinCEN's website. And if you're a small business owner and you're being threatened with $500 a day penalties, $10,000, whatever, you're probably freaking out and you're probably going to file the damn form, which, they want to know everything because the eye of Sauron is upon you. Swift's proposal to include Bitcoin in national reserves. A recent proposal by local Bitcoin advocates aims to modify Article 99 of the Swiss Constitution, requiring the central bank to allocate part of its reserves to Bitcoin in addition to gold. The initiative has 18 months to gather 100,000 signatures needed for a public referendum. Hong Kong lawmaker advocates for strategic Bitcoin reserve. Lawmaker Wu Ji is advocating for the Hong Kong Special Administrative Region to consider adding Bitcoin to its fiscal reserves. He suggests using foreign exchange funds to acquire and hold digital assets long term. That's a good idea. Microstrategy has acquired 2,138 Bitcoin for about $209 million at $97,837 per coin. The company now owns 446,400 Bitcoin, acquired for approximately $27.9 billion at about $62,428 per coin. Tether added 7,629 Bitcoin to its reserves. Tether recently transferred 7,629 Bitcoin, worth approximately $700 million, to its Bitcoin reserve address on Monday, as reported by The Block. Genius Group now holds 319.4 Bitcoin. The Nasdaq-listed AI-based education company announced an additional purchase of $10 million worth of Bitcoin. CEO Roger Hamilton stated that their initial target is to accumulate 1,000 coins. Fold announces a $30 million convertible note financing. The Bitcoin financial services company secured a $20 million convertible note financing from ATW Partners, with an optional $10 million available upon closing its business combination with FTAC Emerald Acquisition Corp. The funds will accelerate its Bitcoin offerings and treasury development. Tangem fixes a bug exposing user private keys. Multi-coin wallet provider Tangem has addressed a significant vulnerability in its mobile app that exposed users' private keys through support emails. The project estimates that the issue potentially affects less than 0.1% of its user base. Affected users are urged to update the app and move their funds out of potentially compromised wallets. When activating a wallet with a seed phrase by generating or importing one, the private key was mistakenly logged in the mobile app's logs. These logs could later be accessed during interactions with our support team, the project acknowledged in a blog post. Do Kwon pleads not guilty to fraud following U.S. extradition. Federal prosecutors in Manhattan have charged Do Kwon, co-founder of Singapore-based Terraform Labs and developer of Terra USD and Luna, with a 9-count indictment. The charges include securities fraud, wire fraud, commodities fraud, and conspiracy to commit money laundering. Sounds like he's in trouble. U.S. Treasury hack on December 8th. Oh, according to a letter sent to leaders on the Senate Committee on Banking, Housing, and Urban Affairs, a threat actor has gained access to a key used by a vendor to secure a cloud-based service used to remotely provide technical support for Treasury Department offices and users. This access allowed the attacker to override the service's security and access certain unclassified documents. Oh, good thing they didn't get any classified documents. At least 35 Chrome extensions compromised. A hacking campaign that began on December 5th, 2024, has compromised at least 35 Chrome extensions, affecting approximately 2.6 million users. Cybersecurity experts advise those impacted to promptly change their passwords and tokens, clear sessions, and review logs for any suspicious activity. Or don't use Chrome. How about that? A list of affected extensions is available here, and there's a link. And as usual, I'll put a link in the show notes to all the articles that I'm reviewing. Bitcoin miner Hive Digital relocates to Texas. The firm is relocating its headquarters from Vancouver, Canada, to San Antonio, Texas, citing favorable Bitcoin mining regulations and better access to U.S. capital markets, according to the Miner Mag. CASA to discontinue support for iOS 15 on February 1st, 2025. For CASA clients currently using iOS 15, we recommend you either upgrade to a newer version or, in some cases, upgrade to a newer device, said the company. And finally, the Bitcoin Asia 2025 conference is scheduled for August 28th to 29th in Hong Kong. Tickets and other related information are available here, and there is a link in the article. Okay, moving on with the news. Hodler's Digest, December 29th through January 4th from Cointelegraph. We will skip over the shitcoinery unless it's funny. Oh, this is actually sort of funny. Odds of a 2025 US Solana ETF listing top 77%, according to a VanEck research head. Yeah, don't care. Terraform co-founder Do Kwon appears before U.S. judge, pleads not guilty. Yeah, we already heard about that. Um, Meme coins will continue to lose market share to AI agent coins. What? What the heck? AI agent tokens will continue outperforming meme coins in 2025, but their momentum may fizzle out by 2026, according to a venture capitalist. Meme coins will continue to lose market share to, quote, AI agent coins. I consider this a migration from financial nihilism to financial over-optimism. Qureshi said the AI agent craze will probably persist through 2025, but it won't last forever. As more advanced AI products come along, people will lose interest in social media chatbots. It will die off eventually. This is not the long-term disruption to watch out for from AI, but will be the CT's fixation because it is the most social, he said. AI agent chatbots have become popular in the crypto industry, offering crypto users insights and market price predictions. Hmm. I don't know. It sounds like shitcoinery to me. China tightens crypto trade oversight with new Forex rules. China's State Administration of Foreign Exchange introduced rules requiring the country's banks to monitor and flag risky trades involving crypto assets. On December 31st, the South China Morning Post reported that mainland China's new rules will make it more difficult for residents to buy digital assets. Under the rules, banks must monitor and report risky Forex trading activities. This includes cross border gambling, underground banks, and illegal cross border financial activities involving crypto assets. Chinese regulators also require banks to track the activities based on the identity of individuals and institutions involved, their sources of funds, and the frequency of their trades. Liu Zhengzhao, a lawyer at the Zhiheng law firm in Shanghai, said the new rules will provide another basis for punishing crypto trading and added that China's regulatory stance for crypto may continue to tighten. We already heard about this earlier. IRS issues temporary relief on crypto cost basis method changes. Uh, Ether could struggle to deliver meaningful rallies in 2025, according to 10x Research. Yeah, I don't care. Bitcoin only. And I keep having people asking me about Ripple. And I, I, my response is just, it's great if you want to speculate, gamble, whatever, but Bitcoin. Um, Thought of the week, Cybertruck explosion at Trump Hotel linked to bomb or fireworks, according to Musk. False flag. Illegal crypto ads prevail in the UK despite FCA warning. Illegal crypto ads continue to appear in the United Kingdom despite its financial regulator asking crypto projects to remove their advertisements targeting the country. According to a Financial Times report, 54% of the 1,702 alerts issued by the UK's Financial Conduct Authority between October 23 and October 24 ended in illegal crypto ads being taken down. The report said the rest of the crypto-related promotions are still up. The FCA has not yet fined companies that fail to remove crypto ads that violate the FCA's rules. Regulations require digital asset promotions to get approvals from the FCA or an FCA authorized business before going live. Boy, those people really need Bitcoin over there in the UK, I think. And that wraps up Hodler's Digest. Moving on, a little bit deeper dive into this. IRS pushes back new Bitcoin tax rules to 2026. United States Internal Revenue Service has delayed the new digital asset tax reporting rules by 1 year. Originally set to activate on January 1st, 2025, the new rules will now go into effect on January 1st, 2026. This gives centralized digital asset platforms, brokers, and investors more time to adjust to the changes, which many thought would have been a nightmare to deal with if implemented too soon. These new rules aim to identify the cost basis for the transactions performed in Bitcoin and other digital assets at centralized digital platforms such as exchanges. If an investor sells the Bitcoin he owns in the brokerage account, the rules say that a method of accounting should be set by the user to specify which units are sold first. In case taxpayers do not choose a method of accounting, then the automatic method will be adopted is the first in, first out. I think that's what brokerage accounts do uh, now, anyway. FIFO assumes the earliest acquired unit of Bitcoin is sold first, which can have a big impact on capital gains tax, especially in a bull market. According to Shahan Chandrasekera, head of tax at CoinTracker, you'd be unintentionally selling the earliest purchased asset, which tends to have the lowest cost basis first, while unknowingly maximizing your capital gains. The IRS's new rules permit taxpayers to select other acceptable accounting methods, including highest in, first out, or HIFO, or specific identification. In specific identification, for example, the user decides exactly which units he's planning to sell. These methods are flexible and may assist investors to reduce tax on their national income. However, most of the centralized finance brokers today do not have the right systems in place to support them. Therefore, the shift to 26 is considered as a viable step. Chandra Sekera described the postponement as good news for crypto holders. He says this day gives brokers long enough to enhance their frameworks to recognize the other accounting models. This is crucial to reduce tax liabilities and avoid the unintended consequences of the FIFO default method, Chandra Sekera added. Almost all C5 brokers were not ready to support specific identification as of 1/1/25. One of the biggest problems with the new rules is the use of FIFO as the default method. Chandrasekhara says FIFO will be catastrophic for investors in a bull market. By forcing the sale of oldest assets with lower cost basis, investors will have huge tax liabilities. The announcement of the delay comes as the IRS faces legal action from major digital asset players in the market. On December 28th, a number of organizations, including the Blockchain Association, DeFi Education Fund, and Texas Blockchain Council, sued the IRS. The lawsuit challenges rules for brokers to submit users' details and transactions histories starting 2027. The rules themselves have come under tremendous criticism from constitutional purists and others who believe that the IRS and fellow agencies exceed their legal mandate through these rules. All these reporting requirements would apply to DEXs and brokers, mandating them to report gross proceeds from the sales of Bitcoin and other digital assets by their customers. Opponents think these measures violates user privacy and put high costs on the parties involved within the markets. The 1 year delay gives brokers time to upgrade and investors time to prepare. Experts recommend that Bitcoin investors choose an accounting method as soon as brokers support them. This temporary relief, I guess I would choose HIFO, but I'm not selling. This temporary relief could also mean that the IRS is admitting that Bitcoin taxation is not a simple matter. It may also signal the agency's understanding that the transition process to the level that is not burdensome to investors and brokers needs more time. Um, how about never? Can we do that? Okay, next up is from Decrypt. Bitcoin mining is now harder than ever, 16 years after Satoshi started it all. It's Bitcoin's birthday. The very first Bitcoin block was mined 16 years ago today. Of course, this was back on January 3rd, so we're a little late. And the network is stronger than ever, with mining difficulty reaching a new all time high mark as the biggest cryptocurrency rides into the new year. Data from BitInfo Charts shows that Bitcoin difficulty hit a new all time high of 109.78 trillion hashes as of Monday, the highest ever seen for the original blockchain network. That means it takes that huge amount of hashes to mine a new block. Hashing is the computing process of turning data into a fixed length string of letters and numbers. In the Bitcoin mining world, powerful machines do this as fast as they can in order for new blocks to be added to the blockchain, which is just a long list of transactions. Sim- Simply put, with the difficulty level now harder than ever, the network is even more secure, just as was always intended for the biggest crypto network. Bitcoin's first block was mined on January 3rd, 2009, known as the Genesis block. Bitcoin's pseudonymous creator Satoshi Nakamoto minted 50 Bitcoin into existence with the move. Since then, 877,665 blocks, well, actually, as of now, it's 877,981 blocks, have been mined and added to the network's long ledger. On a blockchain, blocks contain data on transactions. Only miners can add data to the network, and the difficulty level helps prevent unauthorized additions or edits to the chain, as it would take an incredible amount of computational power to take over the network. And Bitcoin's mysterious creator or creators are likely happy with how durable the network turned out to be, given 16 years now of increasing difficulty. Although I don't like it because my solo Satoshis have a harder time finding a block. Okay, next up from Bitcoin.com news. Michael Saylor's Bitcoin poll exposes 2025 buying frenzy. 78% say more Bitcoin. Michael Saylor, the executive chairman of software intelligence firm Microstrategy and a notable advocate in the Bitcoin community, conducted a poll on January 1st through social media platform X. The poll posed a straightforward question to his followers: whether they anticipate finishing 2025 with more Bitcoin than they currently own. The poll drew 65,164 votes, reflecting strong community interest. 77.7% of respondents indicated plans to increase their Bitcoin holdings by the end of 2025, highlighting optimism about the crypto's future growth. Meanwhile, 22.3% stated they do not expect to accumulate more, reflecting a mix of contentment with current holdings and a caution about potential market volatility. Saylor also conducted an earlier poll on December 29th, asking his followers about Bitcoin's projected annual returns over the next 21 years. A total of 93,456 X users participated, with 39.3% selecting the highest return option of 38%. The poll offered four choices: 14, 22, 30, and 38. This engagement reflects growing interest in long-term Bitcoin projections. The MicroStrategy executive chairman continues to highlight Bitcoin as a durable asset, comparing it to digital gold. He projects Bitcoin's price by 2045 to range from $3 million in a bear case to $49 million in a bull case, with a base estimate of $13 million. MicroStrategy has steadily increased its Bitcoin holdings, reaching 446,400 Bitcoin, valued at approximately $27.9 billion as of December 29th. Recently, MicroStrategy unveiled its 2121 plan, aiming to generate $42 billion over 3 years through an equal mix of equity and fixed income securities to bolster Bitcoin acquisitions. This assertive purchasing approach has influenced MicroStrategy's stock trajectory during 2024. Investor enthusiasm and the company's inclusion in the NASDAQ 100 propelled shares upward. Next up from Cointelegraph, this was posted January 4th, and more MicroStrategy news. MicroStrategy eyes more Bitcoin. What is the quote that Michael Saylor says? The only thing better than Bitcoin is more Bitcoin. More Bitcoin with potential $2 billion preferred stock offering. MicroStrategy, the largest corporate holder of Bitcoin, is eyeing a $2 billion raise from a perpetual preferred stock offering to buy more Bitcoin in a move that would expand on the company's 2121 plan. The perpetual preferred stock may be obtained through converting MicroStrategy's Class A common stock, paying a cash dividend, redeeming shares, or a combination of these, the Bitcoin stacking business intelligence firm explained in a January 3rd statement. The offering is separate from MicroStrategy's ongoing plan to raise $21 billion in equity and $21 billion in fixed income instruments, a strategy it has largely implemented in recent months to fuel its Bitcoin buying spree through senior convertible notes and debt. The perpetual preferred stock offering, which MicroStrategy intends to use to strengthen its balance sheet and buy more Bitcoin, is expected to occur sometime this quarter. However, the decision whether to proceed with and consummate the offering is in MicroStrategy's sole discretion and is subject to market and other conditions, MicroStrategy explained. Perpetual preferred stock offering is also senior to MicroStrategy's Class A common stock in the sense that holders have priority in the event of a bankruptcy or liquidation. MicroStrategy owns 446,400 Bitcoin, valued at $43.9 billion, according to Bitcoin treasuries. It purchased 257,250 Bitcoin alone in 2024, the company's largest Bitcoin buying year yet. The 446,400 Bitcoin have been purchased at a dollar cost average of $62,500, meaning MicroStrategy is up 57.2% on its Bitcoin investment. The firm's Bitcoin investment strategy was orchestrated by Executive Chairman Michael Saylor, who has played a key role in paving the way for corporate Bitcoin adoption around the world. Saylor's Bitcoin strategy has also benefited MicroStrategy shares massively, which increased 13.2% on January 3rd to $339.60, up 438%, from this time last year. MicroStrategy has marginally fallen 0.19% since MicroStrategy's perpetual preferred stock offering plan was announced in after hours. And finally, from Crypto Potato, this was updated today. Arthur Hayes, China interest rate bazooka will goose Bitcoin prices. Financial analysts expect, it's at its fourth quarter meeting on December 27th, the People's Bank of China Committee proposed a more dovish low interest rate policy going forward. At the same time, the US Fed has different plans. Financial analysts expect the bank to make adjustments to the target funds rate so that credit demand aligns better with monetary policy, according to Reuters. As a result, crypto analysts expect a big wave of monetary support for Bitcoin prices in the Middle Kingdom's yuan printing press. China's central bank issued a statement on Friday announcing a cut to the bank's reserve requirement ratio and interest rates at a proper time. The central bank says the PBOC is likely to further slash China's interest rates from the current target of 1.5% sometime soon in 2025. The PBOC last cut rates from 1.5% to 1.5% from 1.7% in September, the same month as the Federal Reserve pivoted to a rate cutting regime. Moreover, China's 10-year and 30-year Treasury yields both hit record lows on Friday over expectations of fresh monetary easing. The interest rate cut at China's central bank will help to counter a deflationary yuan that threatens to spiral into debt-crippling loan revaluation, but it will also push up the prices of the basket of financial goods, especially stocks and cryptocurrencies. South Africa cut its main overnight money market rate by 0.25% to 7.75% in November. BitMEX co-founder Arthur Hayes predicted the next rate cut in Beijing will combine with the Fed's low rate regime and cause a, quote, glorious rally for Bitcoin and other crypto assets in 2025. Hayes is an influential macro strategic analyst for the price levels of major cryptocurrencies such as Bitcoin and Ethereum. Immediately after the U.S. Federal Open Market Committee announced a rate cut in September, Bitcoin's price rocketed above the $60,000 level. Since then, the little orange coin has reached record high levels of $100,000. 7 months ago in May, Hayes wrote on his Medium blog that when China brings out the monetary bazooka, buying a Wall Street Bitcoin ETF will be a no-brainer for regulated investors in the US. If my theory becomes reality, it is trivial for any institutional investor to buy one of the US listed Bitcoin ETFs, Hayes wrote. Bitcoin is the best performing asset in the face of global fiat debasement, and they know it. In addition to a rising Coinbase Premium Index, ETF flows for Bitcoin are two strong indicators that mainstream investors are flocking back to Bitcoin in January. Finally, wanted to highlight this week's featured post on the Bitcoin Fortress Substack, link included in the show notes. The article is entitled Why Forgiving Student Loans is Bad Public Policy. So check that out, and if you like it, please become a subscriber. And we'll finish up with the weekly top boost on Fountain. This was for Bitcoin Fortress 147, which was posted on December 22nd, 2024. At user 401850001 with 950 sats. Thank you so much for that. And as always, at God's Death with 537 sats. Thank you, sir. And so, with that, I will thank you for listening to the podcast. If you enjoyed the show, please like and leave a comment. Also, don't forget to subscribe on your favorite podcast app so you don't miss an episode. You can also follow my Substack. It's at bitcoinfortress.substack.com. And you can follow me on Nostr. My NPub is in the show notes. And I will talk to y'all next week. And again, Happy New Year. Bye bye.